Hey guys, we are back. We are back. We are back. This is your boy, MC Fire. We're coming at you again with the first Sunday market overview of 2025. So, if you made it to 2025, shout out to you for making it to another day in another year, right? Over here, we like to keep things simple and easy. So, what we're going to cover today on top of our regular market coverage is essentially we're going to look at all of the indices and we're going to look at all of the major ETFs. We have a quick and easy way to do that, so don't think we're going to get overwhelmed with looking at everything individually. And we want to look at our very simple trading system. We made it simple, easy, something that you don't have a lot of FOMO attached to it. For anybody who necessarily has a hard time following other people's trading systems, we have the perfect trading system for you, right? Things to keep in note and going into 2025, we're going to have better delayed gratification, use good debt over bad debt, and don't really have FOMO, right? Trade with a plan. So without further ado, let's dive right in. So we like to start out typically with the good old bar charts here. We like to make sure that if we want to beat the market, we're investing in things typically that consistently are above the market. And we also like to see a couple of value buys. Now, if you noticed, each one of these lines represents a major, how can I put it? Not like an ETF, but a major sector in the S&P 500, right? We'll go down the list. You got healthcare, utilities, financials, communication services, energy, real estate, consumer staples, materials, consumer discretionary, info and tech, and industrials. So these things really are the composite or the individual components, not individual, but components that make up the S&P 500. Now, inside of those, the ETFs, there are individual stocks. So these sectors, because they make up the S&P 500, which sectors typically outperform the market? Well, they're highlighted here. The market is in black, and the overall sectors that outperform are above, and the sectors that are underperforming are below. This is also a really good way to identify sector rotation. So if you're looking at it, it's like, hey, where's money outflowing? Where's money inflowing? You're looking at sector rotation. Prime thing to take into consideration. It's not going to give you necessarily what individually is going into and out of what, but essentially you're going to have an overall clear picture, right? You're not going to know the individual stocks, but more of what sector. Let's highlight and bring to the front of the classroom some of the outperformers here. So financials, communication services, and info and tech are pretty much your major guys. These guys are all going to be above the here, let me get that out here. Yeah. These guys are all going to be in district out here. These guys are all going to be above essentially the S&P 500. Now you can look back historically to see, well, is that been the case overall? Financial sometimes lags or tracks right along with the S&P 500, but you can look back consistently and say, okay, it doesn't mean that this is always going to be the case, but for a good portion of it, info and tech and communication services has particularly outperformed the market. So if you want something, if you want to be an individual that outperforms the market, it's probably a good idea to start in the ETFs that have a track record of doing that. And we can see that here. That doesn't mean it's going to always stay that way. We've always got to come and check this, but we definitely want to be cognizant of that. Things that are kind of lagging as we throw everything else back up. You've got healthcare lagging, utilities not lagging too much. We have industrials, I believe, is also lagging. Nope, not too much. And then consumer discretionary. Nope, not too much. Okay, so this is another one. The reason why I didn't throw it on there but at first is because his consumer discretionary has until like November started its major rally. So your consumer discretionary normally doesn't track above the S&P 500. But as you can see a drastic push up into the S&P and around November. Essentially, people are out there spending money, right? So for the holidays, really. So they obviously are going to crush it. But is that going to be the case going forward? That's the real question. So we saw a pretty major dip kind of post the holidays, which is to be expected, right? We'll take them off here. We have materials that's also lagging. Real estate is also lagging, right? Those are going to be your big boys. You got healthcare, real estate, and materials. Those are going to be your major laggards. I don't think energy is in that cohort. It's kind of somewhere in the middle. Oh, it is kind of a little bit, but the big three is the real estate sector, the healthcare sector, and the material sector. So when we go look at those, keep those three sectors in mind for potential value adds. That if these sectors get going, you can find the best bang for your buck in those sectors, right? And we have some other tools that we can pull out to go ahead and investigate that pretty quickly, right? For the Fed Watch tool, right? If you guys have been tracking this channel for any length of time, we kind of cover this almost on every single video, if not, or every single Sunday video. What the Fed's going to do is extremely important to rates and access to the cheaper money, right? The higher the interest rate, the more expensive it is to borrow money. The lower the interest rate, the lower it is to borrow money, and the lower interest it is for the Federal Reserve, for the government essentially, to service their current debts, of which we have a considerable amount. That is not necessarily political or anything like that on how they service them, but those are just the facts. So the interest rate has a huge bearing on that, and the lower the interest rate, the easier it is for us to service those debts, okay? You do have here that they did cut interest rates on December the 18th, like the Fed chair said, but what the current rate as of now is around 4.25 to 4.5. That's probably not going to change in the first rate cut going into the end of this month, right? The 29th of January. It's probably not going to happen. Okay, so I wouldn't hold your breath on that. Now, granted, there is a new administration coming in. So as it stands right now, we only are slated for 2 rate cuts. We're only slated for 2 rate cuts. But that could definitely change with the new administration coming in for sure. Definitely could shake things up. So I wouldn't hold my breath as regards to the 2 rate cuts being permanent. That has 2 effects, right? I believe that a rate cut only makes the market fail upwards. If you notice, V-shaped recoveries have been kind of almost a theme in the last 5 years for this market. Something might happen, but then it immediately rebounds. And so I believe that the Fed kind of has no choice but to cut rates, because the servicing on the debt and the interest is a considerable amount of GDP. I think something like 50%. It's insane. So they're going to have to alleviate some of that pressure. And to do that, they're going to have to cut rates, right? You heard it here. Maybe not first, but you heard it here that is what I'm anticipating, right? So look out for that. Okay, so let's kind of get into a few plays here. We definitely have been, there's some plays that we had on the board, but there also is some stuff that definitely we can look at that's brand spanking new, right? We're going to kind of go down the scan list. I'm not sure if you guys can see that or not, but if you can, cool. If you guys can't see something, you want me to open up something a little more, let me know in the comments, right? But as it stands right now, we're going to go down our in-play list, and then we're going to go hit the flex grids. Actually, we're going to hit the flex grids first. Let's do that. So we'll hit the flex grid, and then we'll pull up the outperformers, and then we'll pull out the laggards there. First outperformer is XOK. So what we like about this is we could see very clearly, right, as the outperformers are on screen now. I'll minimize this. Actually, I'll expand this because my big head is taking up some of that space. But what we'll probably do is we'll zoom in, right? So you got XOK here. And as you can see, man, it has been chug-a-lugging and doing its thing. So we're going to maximize that here. Give it the maximize screen. Thank you. Maximize cell. Shout out to the maximize cell. And we got essentially all the indicators that are on here. It's not that much. We didn't clutter our bar charts. All we want to do is put in some key levels and then say, hey, is the trend up, right? Is the trend, how's it looking? Kind of since back here. The trend has essentially been green all the way back at the beginning of 2023, right? And it's kind of been a nonstop up roll from there. So if you can get a pullback, definitely take that in the XOK. I think there was an opportunity in the XOK. If we go to the charts here, pull the XOK, there was definitely an opportunity that we did shout out, I think Thursday or Friday, right? Thursday or Friday, essentially threw a setup candle and then broke the high of that, right? So if you got in, we are already exposed to the XLK as it stands, full disclosure. But if you got in at the break of the high, right, what's your stop? Very simple system. Stop or the low. The way we see it is we have a very simple what I call an IOU system. Identify the trend, outperform outstanding candle, the O, right, which is this red candle right here, and then now it's up to you to take the trade. You to set the trade up, you to get the entry and the exit and do the proper risk management. Wait for the trigger. IOU. Identify the trend. Let's go through that now. The trend on the weekly, is currently green. So the XLK is been green since all the way back in February. Don't have to worry about that. We've identified the trend. That's step one. Step two, outstanding candle. If we're in a green trend, right, and we see a outstanding red candle that's in green territory, that's an issue, right? He's outstanding. You're out of line, so to speak. So if we could take a play above that, right, off the trigger, that's on you. You can take that play. You can come in here and say, hey, I'm going to take a buy at the high of that candle, right? I want to respect all my buyers that washed through those sellers, right? Remember, the stock market is a war between two factions, the buying faction and the selling faction. If the buying faction is winning, price goes up. If the selling faction is winning, price goes down, right? If a uptrend occurs and then the selling faction starts pushing considerably to the downside, but then the buying faction immediately pushes all those sellers and gets them off balance, well, then it's up to you to make a decision with that new information. We like to take that trade to the upside and then set a stop out below the low. That's kind of where we're going with this, guys. So I really do hope you guys can get it. Really doesn't get any simpler than that. If you have an uptrend and you have a outsized candle to the downside, you could take that play to the upside. It's up to you if you want to take that play, right, with the proper risk to reward. Like, let's say, for example, if I get in at a break of high here with a stop here, and my first sign of danger is the high, is that enough reward for the risk, right? Is that enough reward for the risk? We'll zoom out a little bit. Is that enough reward for the risk? Well, I say no, right? If you take this break of high, which is the same candle, right? Break of high to the high, you're essentially got a 1 to about 0.5 to 1. This is not necessarily what I'm looking for, but if you see something like this, right, where it breaks and it goes again, approaches high, that's more along my speed. You've got a 1 and a 1.5 to 1. A little better, right? This is more better, and then so on and so forth. So unless you're anticipating a considerable break of high, let's say, for example, on the weekly, it goes to 3 ATR, then that's justifiable. But as long as your risk to reward makes sense and you adhere to your proper risk management, which is don't put the money on the table if you don't expect to lose it, and you're adhere to your stop loss, meaning once it breaks the low, you'll let it go, right? There's obviously caveats to that. If it gaps major against you, keep it on. We'll kind of go through that in some at a later time, essentially. But let's go back. We're going to take a look at the XLK, right? So as we cycle through here, we've got Apple. Apple's doing considerably good. We'll get the volume out of the way there. But Apple's doing considerably good. Slight pullback on Apple. So watch out for that. Good uptrend. Most of the stuff that's in the XLK is going to be in a prime position or already launched, right? AVGO is one of those that we'd like to buy close to the moving average and sell away from the moving averages, right? Getting in here when it's tight and then watching it explode, that's like the best feeling ever. I'm telling you, it's crazy. So what you want to do, I think the market has most of the general synergy, right? The meta behind the markets is completely backwards. People believe that up is good. Rarely when it pulls back, that's good. When it gets away from the moving averages, that's kind of when you got to be cautious, right? So down here, when it pulls back, we got calls on AVGO. And then when they started pushing at the first sign of danger, we took some profits. We took some more profits, all the way up. And then we closed as it started to pull back, right? Now it's kind of settled into some rotation. but pulling it off all the way up and then taking off our position did plan out to be pretty good. But when you see something like this, most people get excited or start talking about it after it's already started to make the push. Remember, you want to buy the rumor, sell the news. Buy when it's low on the dips, sell it at its high when everyone's talking about it and you're offloading your position to the other guy that's buying late. Okay? You don't want to be that guy. You want to buy in the pullbacks. And if you look at this channel, you'll be that guy. Nvidia, making good headway, right? There's no necessarily a setup candle on Nvidia, but just seeing that is pretty good. Let's go take a look at the NVDA. Okay. There was a slight push here, so that's probably the most indication you got that Nvidia might see some outsized buying. But remember, we already have exposure to Nvidia, so I'm not necessarily looking to add to that position, right? We have a lead contract for a year, already made significant cash on that with the roll up to highs. So if Nvidia can push beyond that, right, into the 180 level, which we have our alert there, that's when we would be looking to take a little bit more profit and roll up our position. Barring whatever happens, it doesn't really matter, because all of our risk that we initially, our hard sweat and tear, our hard-earned money that we put into the market, we've already received that back from the market. So we're playing the casino essentially for free. If you can get that concept, I'm telling you, trading is going to be your best friend. Okay, let's push on a little bit. So we've got Nvidia there, no play there. Now we do have CRM, Salesforce. Let's take a look at Salesforce real quick, because you can see this is kind of what we want to see. We want to see tighter moving averages, expand down and then pop out of the moving averages. But this has a little bit more room to pull back. But if we're looking at it from a rotational standpoint, not too bad. I'll mark that up for you guys right now. When I'm talking about the rotation, basically it's just support and resistance. When I say rotation, it rotates down to support, bounces up to resistance. Okay, that action we call over here rotation. Okay, it could be on a large time frame, small time frame, doesn't really matter. The action of bouncing between support and resistance and staying inside of those is what I like to call rotation. So there could be some major rotation here from 369 down to 319. Keep that in mind. If we get a bounce off of that, it's well within the realm of possibility. But again, our setups have a little bit more edge with our system, so we like to use that as much as possible, right? You also have Microsoft. So Microsoft is a kind of below its 21 period moving average currently, but as it stands right now, it has some support here, support at these levels at 403.88. I anticipate that with it rotating down there, if it gets down there, I'd be looking for a potential setup, maybe to add on to some of our long-term holdings at that level, right? You see this candle right here at the lows at 383, but we like for it to come down and just come and pick us up. If you come down and come pick us up, awesome. I don't feel like chasing you. Just come down and pick me up. I'll be there waiting for you. Same thing here at Oracle. Not really looking to make a major play on Oracle. We did make a substantial play on Oracle back there. Let's go actually take a look at that on Oracle. So Oracle. Thank you. So what was the setup? Essentially, there's your setup right there. You got a red candle out in open waters. I call it open waters because there's no earnings, there's no splits, none of that stuff, right? You get a nice juicy red candle that breaks a high, right? Your stop is the low of that. And then what does it do? Wham, absolutely runs off with the bag at Oracle. So made some really good profits there. Actually, we did it a couple times. So shout out to us there. Moving forward, right? This is kind of what you want to see. Imagine, let me just zoom in right here, okay? Okay, now at the end of the chart here, this is kind of what you want to see, right? You're seeing it come pull back, and these pullbacks is when you start looking for setups. We're already in green territory from the weekly, so that's the first IOU part. The I is taken care of. Identify the trend. What's the trend? Double green. It's green. It's going up. Awesome. Now, the next thing is a outstanding candle. We scroll over there to the daily, right? We say, okay, in Oracle, there was a couple outstanding candles. Here's one right here. The outstanding candle has now been identified. Now it's up to you to come in, place your alert, and just be patient. You have to then say, okay, is this risk worth the reward? The first reward, the first level I see is the first danger area is right here. So if I take the play, I want to at least see a return going back to the high, that danger area, or this. Anything up below that, don't even take the play. If you do not believe it can get up here, if you do not believe that the play can get up here to at least give you a 1-to-1 risk to reward ratio or higher, don't take the play. It doesn't make any sense, right? Or if it doesn't give you enough return, whatever, don't take the play. If the risk is too great, right? If you can't hold to stop with a low, or you didn't set it up for a high return to risk ratio like a butterfly, do not take the trade. That is the point. There's a couple outstanding candles. Here's one. Here's a couple other ones as it breaks the high. It's a little, I don't like to chase there. Here's another one. You notice the trend is green, but I'm only focusing on the outstanding candles. You shouldn't be in this territory. This is green territory. You're not supposed to be here. So when I take that buy and it rips, are you okay with buying at 330, right? And getting your first indication that this might be exhausted at 142. That is what I'm talking about, okay? We'd like to stay in trends for like 2 days to 3 weeks, ideally. That's kind of how we want to play it. Cisco. Nice little juicy pullback here. It's kind of going flat. So we actually did, I believe in Cisco, put on a butterfly that didn't pan out too well. It is what it is. It was really cheap too. ACN, yep, there it is. Nothing too crazy. We don't have any setups on ACN as it stands right now, but you guys can see it. It's been in green territory essentially since July, and it's kind of been making a few dips for you to potentially take that. I think we might have taken a play in ACN. Let's go take a peek there. Was it a butterfly? Probably was. Oh yeah, I remember this one. So this is what I'm talking about specifically, right? You have a play in ACN. We did see a green candle after this major push, right? So there's your fair value gap, right? It already popped in there for the fair value gap. It is what it is, right? I wanted to take a butterfly up to the highs, and it actually did go, and we did take it off. So essentially ACN gave us around 100% return on investment, typically with those butterflies, if it gets within the money. That's what we like to see. It didn't get all the way up to where our price was, but it did get up to where we could take the butterfly off for a very nice, very, very nice return. It has now since just been rotating between highs, and it's a resistance to support. So that's what I'm talking about. This level at 375.85 is your resistance, and this level at 347.19 is your support. And it's just ping-ponging between those two, okay? That's called rotation. Anytime it's ping-ponging between support and resistance, not really going anywhere new. Yes, it might make some pretty big candles, but the way you set it up is different, right? Your rotation, you might not necessarily take the first candle, setup candle that's up here at the highs if it breaks to the upside. Why? Because, hey, I don't know if it's going to fail. If it hasn't broke that resistance level, we don't know if it's going to fail. So let the charts kind of tell you what they're going to do. Don't impose your will on the charts. We've got now. So now is not looking too bad. This is kind of good that we want a little bit more of a pullback here or a setup candle. I like the pullback. So sometimes when it's pulling back and the moving averages are wide, not tight like they are here. Here, let me mark that for you guys. What I mean by tight, right? We'll put a box drawing. So yeah, right. I'll move that here. That's tight, right? We like to see stuff like this with duplicate drawing and stuff like this. In those areas is what I'm talking about. As the moving averages contract and get nice and tight and compressed before they explode outwards, right? Big, nice, tight, juicy compression before they explode outwards. We love that, right? Compression, explosion, boom. It's like breathing in and out. When you exhale, you're breathing out. The thing is getting real tight. Your chest is getting tight, and then when you do, take in air and then explodes out. Right? That's exactly what's going in. It's taking in air here, and then it's going to exhale that out, up or down. Right? Could be either or. Does the same thing here, and you kind of get the picture from there. Moving on. Um, IBM looking good, not too bad. IBM pullback. There is no setup candles as of this week, so keep pushing. But you can see that moving average wise, right? It's starting to do some pullback. It doesn't mean that hey, just because it's pulling back, I take the play. Look where it went on the previous resistance there, on the previous support. Excuse me. Look at where it went on the previous support. So because of that, act accordingly. If you can get the support, right? Wait for the support. Wait for it to come down and get you at your price. It'll probably or could probably throw a setup candle that'll give you a way better entry anyway as people get into the position late before the break, right? So if they're jumping in before the break and it starts to bounce against them, it's fully in the line of rotation. Wait for it to come down and pick you up. AMD. Loving AMD right now. This could be something that we could get a buy bias on soon. Not quite there yet. I would say like I have an alert here at 128.03. So that 128.03 level is what I'm looking for maybe a buy bias. It will put in a double bottom here at this support level anyway. So we're hoping that if it holds the line, remember this is on a weekly chart. So previously it comes down to this level, puts in 1 week for the bounce. Then at this level, there's 3 weeks where it's playing around at this level. So potentially it's respecting this kind of pivot zone right here, right? It's respecting this staying within that, which is good. We wanted to see if it can push higher. So AMD is something that we could potentially take to the upside. Now, what I want to do is with buy biases, I'm a little bit more cognizant of the news. We're going to go over here to our insight tool. We can see some of the fundamentals of AMD. I haven't checked it in a while, right? It does have a year-to-date price increase of about 3%. That's since the beginning of the year, so essentially a couple days ago. Nothing too crazy. Revenues, though, on the quarter, looking not too bad, right? Free cash flow also increasing. So from a business standpoint, why am I checking out this company? I'm checking out this company because look at the cash to debt, look at the free cash flow, look at the revenue. Is it slowly increasing? How's your EBITDA, right? We also want to look at shares outstanding. Is that increasing? For those who don't know what shares outstanding is, it's basically the shares per price times the common stock that's out in the market. So people that actually buy and transact the stock, that is called common stock, right? Whether it be in pension, whether it be retailers or major investors, those shares outstanding are what people are buying in circulation times whatever the price is. So the current price is where we at 125.50, somewhere around there, right? So 125.37, right? But yeah, we wanna know, hey, is this a good company to put into your portfolio? I personally, I'm not a financial advisor. I'm not telling you what you do with your money, but I look at cash to debt ratio, free cash flow, revenue, as a potential to say, hey, are we growing? Essentially, is there still growth on the table? AMD. It also has some news articles here. A strong buy as AI data centers ramp up in 2025. That's really where their money is going to be made here, is in the data centers and getting that constant revenue from the cloud, right? Employee count is increasing. That's good. That means the company is not looking to lay off people. And Jim Cramer, if you listen to just Jim Cramer, I think he picks this as one of the one of the picks to buy in 2025, right? So a lot of the Wall Street guys, if you watch it, some of their news, right? It's not necessarily bad stuff coming out. Let's see. We'll go look at one of these articles here because Palantir was mentioned in it as well. Let's see if it'll actually pull up faster than slow here. It might not pull up. Oh, there it is. I probably didn't double click it. Okay. So 3 artificial intelligence AI stocks to buy in 2025 that could be better picks than Palantir. Very interesting. Palantir Technologies, we have that and have had a massive run. If you guys don't know about Palantir, you definitely need to get on it because Palantir is where it's at. I'm going to hop over really quick and see one of my faves, Palantir, right? This is who they're comparing it to. Had a massive run, took profits all the way up. It's still running, so we're still in that play. but we took considerable profits on the way up, right? I think we sold, certain percentages all the way up. I forget what the overall performance breakdown was for that. So we'll have to go back and look at our notes for that. But Palantir Technologies didn't join the S&P 500 until September, which is great news, right, of this year or last year. But with a staggering gain of 340% of the stock, still managed to end the year as the best performing stock in the index, right? We had Palantir all the way back at around $7-8 ish, right? Been talking about that thing since about 2 years. Some investors might be tempted to jump on the bandwagon, even if it's a bit late. I don't think that is the best strategy, though. Here are 3 artificial intelligence AI stocks to buy in 2025. Okay, so we've got Google, right? I think that's actually a pretty good buy in 2025, especially with the advent of AI. They're one of the leaders in AI. Kind of go under the radar behind NVIDIA, but I'm telling you, Google is right up there with them, right? And it's kind of overlooked a little bit. Let's jump down to NVIDIA. There it is. NVIDIA ranked 2 spots behind Palantir as a number 3 stock in S&P 500 in 2024, right? And then, of course, AMD, right? Advanced Micron Devices performance in 2024 was highly disappointing, especially compared to the returns delivered by Palantir and NVIDIA. The chipmaker share price tumbled 80% lower last year. However, I think a rebound is on the way. Let's see why. Although AMD hasn't made investors happy in recent months, the company's business is humming along pretty well. AMD reported record revenues in the Q3 and expects to reach another all-time high in Q4. The same tailwinds for NVIDIA should also help AMD to be sure the company isn't going to dethrone NVIDIA anytime soon. That is a true statement. People like to pick the winners. But however, AMD chips should continue to enjoy strong demand thanks to primarily to AI-fueled data center growth. There's where the constant revenue that people are anticipating for these stocks. So should you invest $1,000 into Palantir Technologies right now? They're probably going to give you their breakdown for that. But essentially, well, let's answer that. Let's answer that question here, right? How would you play Palantir? Well, first let's go take a look at the charts here for Palantir. If AMD is a good buy, right? Because it's undervalued, right? It's pulling back. Maybe we can get a nice bounce, right, off the double bounce, off the support or whatever. That'd be pretty sweet. As it was saying, also revenues have been increasing for the stock. That's a good thing. We like the numbers. And would you be okay with holding the stock at a price level of 102, with it potentially able to get back maybe to 227, right? 227, 102, 227. Is that risk to reward okay for you? If the answer is yes, this is the play for you. If it's not, we can search throughout the other 4,000 stocks and find you a good play. That's where I sit on that. But let's say, for example, PLTR, because it had such a crazy run up, do you think it's something that you would pull the trigger on right now? Remember, we've been in PLTR all the way back since here, all the way back even when it was going in a downtrend. That's just kind of when we had our buy bias in around 8/1 of 2022. So we've been buying here, and we started buying as the trend changed a little bit and as it started pushing. We've been in essentially since $9.92. So if you stick with us, guys, you follow the channel. I'm not going to guarantee that every play is going to be like this, but we try to keep our foot on the button of plays that can develop like this, right? We kind of keep our ear to the ground, even multiple years out, and some things just buy and hold, and let's see what's happened. Palantir has been one of those things, and then we just held it, and we reap the rewards, right? Selling when it hit around 100%, and every growth, we just kind of pulled some more off. Not looking to take too much more off. We just kind of want to see what happens with the stock. But all the way up, we were taking profits, okay? That doesn't mean just hold the thing forever and beyond. Take some profits when you're like, wow, this thing is going pretty good. Doesn't mean you have to take everything off the table. Maybe take 40%, 20%. but find a way to pay yourself throughout its move so that you can make this trading thing worthwhile, fun, and a potential game changer for you and your family, right? Now, do we get into the stock right now? Absolutely not. Why? We wanted to come down and do what? Come down and pick me up. Do not buy up here in the stratosphere fear. I don't care what they're telling you. I don't care if it's the best thing since sliced bread. We over here stick to our rules, right? So there's going to be other opportunities for us to make a play. We live in a world of abundance. You do have to believe that. Use your skill sets, find the right play. Don't go chasing waterfalls, right? This right here is something that is has the potential, as they're saying, it already had an amazing run up. If you missed the boat, no worries. There's going to be another boat. If it pulls back, awesome. When you look at a stock like AMD, that is exactly what we're talking about. Stocks that are in the same cohort as NVIDIA, as Palantir, right, are pulling back. Also, just to take a slight detour, ASML, another one that is actually potentially set up for a buy bias, right? This is the kingmaker, right? The one that builds the chips that a lot of these guys are taking and putting in all their data centers. So if they put in a large order, right, as things break, as things need replacing, guess who's going to deliver that? ASML, right? And so the larger volume means this company's probably not going away anytime soon. Because not too many people can make some of these smaller computer chips that function at a very high level. So ASML on the pullback, right, getting up there pretty 11,110 at its high. So right now it's at 700. A lot of room to really kind of kick up to the upside there, right? This is since its inception, but if we just kind of scroll here, would definitely love to see a trend change on this bad boy for sure, but buy bias could be in effect as it starts to put in higher unbalanced volume after a major pullback, and we start to see things turn around. So we want to be kind of on the button for ASML, AMD, and we'll keep you posted on those guys for sure. Going back to our regularly scheduled program. XLK. So we're back to XLK. XLK looking pretty good. So to the point, right? If these guys are in an uptrend and they're pretty extended, is there some room to grow? There is, but I do believe that as the market fails more upwards and not fails downwards, there is going to be some pullback, maybe in AVGO. There is some room to grow in CRM as well as Oracle, Microsoft, and NVIDIA. And now, because these guys have already pulled back to the 8-pair moving average, so they might pull back a little bit to the 21, but as a sector, I think the XLK is going to do just fine. Let's move on. Another outperformer, we're going to pull in the XLC here. Two major outperformers, right? XLK, XLC. Right. So the XLC, very, very similar story. If we go take a peek, kind of bring it to the front of the classroom here, XLC. We've got XLC and it's pulled back to its 8-pair moving average. Now the moving average cloud is a little wide, okay, a little wider than we expect, but the pullback is sufficient, right? We'd like a little deeper pullback into that cloud there. Doesn't always happen the way you don't always get what you want as regards to what the market's going to do, but we did notice that the market here, let me pull over there, did kind of throw our setup our way. So we went on and took the XLC position versus the XLK because we already have exposure in the XLK. So it doesn't really bode well for us to double up in that sector if we don't need to. The XLC, we don't have exposure to. So we went on and took that position, obviously with what? A stop out at the low. What did we do? IOU. Very simple. Identify our trend. There it is. It's green. It's been green. No problems there. Had a nice dip. Outstanding candles. Look for them. There's the red candle that's outstanding in a prolific uptrend. Okay. Now it's up to us, you, to take the risk, take the position, take the trade after the proper trigger. You have to be aware of that. Whether you put an alert there, whether you put a limit order there, however you do it, it's up to you to frame the trade that you want to place, right? For us, it's a vertical buy, stop out at the low, and then if it goes up to the mark of 101.98, right? 101.98, we'll be looking to make a decision probably roll. We probably won't take this position off. And as it pulls back, we'll see what happens, right? So that's what we went on and took that sector trade. Now, when you look at the sector, is there room to grow? I believe so, right? You've got Meta in this sector, Google in this sector, Netflix in this sector, Disney in this sector, right? Comcast, Charter Cable, T-Mobile, Verizon, and AT&T, okay? Nice pullback in Meta there. So this is kind of really what I'm banking on to really push to the highs, right? In the Magnificent Seven, Meta and Google, and it has since pulled back. If we go take a look at Meta here, there you go, right? There, it did kind of wash this long-term setup candle. Now it took a little longer than we would like, right? But essentially 1, 2, you could have took that buy, would have stopped out at the low. It comes down, gets close to your stop, doesn't really stop you out, kind of keeps rolling. So there is like a, how can I put it? There is a second look at the play if that's something you want to get into. I just rather take the XLC and get the whole basket than just ride Meta. If Meta pushes, XLC probably will push, right? Because the sector as a whole is actually doing pretty good. Even Disney's kind of starting to recover, so it's a good look. So yeah, Meta, definitely a look out here, for that. We also are going to take a look at Meta over here on the inside. Look at that to see, does it have that potential, right? Revenues kind of hitting quarter yearly highs there in the third quarter. So we'll see what fourth quarter revenues do. Free cash flow almost at pinnacle, right? Free cash flow at pinnacle for one of the big seven. So Meta seeing a record revenues there. Net income also obviously is going to be pretty high. Now they did increase debt. Now let's go take a look at that, because debt versus cash is looking a little wonky. Let's investigate. Now we see that most of the debt that they're pulling in, the green is cash. We'll take this out. So essentially it's organized into essentially two factions. You got, outstanding debts and then capital lease debts. From last year, you see the capital lease debt is in kind of the peachy color, and that looks to be the same. Let's see. We'll hover it over. Capital lease 19.25, 19.26. Capital lease 20. So it's slightly increasing. So really the major thing that's increasing is the debt. Capital lease is essentially like buying buildings, buying, units and the cloud service, right? So whatever Meta's getting into, it's not buying storage units. You know what I'm saying? Like data storage units. Not that. They're buying something else. And what they're buying, we don't know, right? Let's see what the news has in store for Meta. Wall Street's analysts think that Meta platform stock is going to 750. Is it a buy, right? So it's a conjecture there. Is it a buy before February? Let's see. Final trades. Meta's killing. Is Meta killing off its own AI-powered Instagram and Facebook profiles? I don't know. Meta looks for a fresh start with Trump. Okay, so it's really a lot of conjecture. Nothing that's in regards to Meta making a new deal, Meta going into a new sector, into a new space, nothing like that, right? It's just a whole bunch of, hey, is Meta going to go up or not, right? We don't really care about stuff like that. We need concrete stuff like, hey, this FDA approved drug got approved, or hey, there's an acquisition or a partnership. We don't want to hear about your, analyst hogwash, right? So we'll pull back up, Thinkorswim here. So yeah, don't have a problem with Meta. Meta looks pretty strong, so I believe that the XLC is going to hold through that, right? There's Meta. Let's go back to the, there we go. We've got Netflix. Netflix on a slight pullback here. It is very, very extended, and that's really the problem I'm seeing with a lot of these XLK, XLC guys. They're pulling back, yes, but look how wide the weekly moving average is, right? We like to get this stuff on. It breaks the 21, kind of gets down into the dirt. We buy it when it comes down to pick us up, right? Buy it when it comes down to pick us up. And if we go take a look at something like Netflix, is there opportunities in this uptrend to buy it on the way up? Let's go pull it out. Because some people don't believe in like buying the dip. I don't get it, right? Why don't you buy the dip and just wait for it to come back and pick you up? Because really, what it shows me, I'm gonna just be honest with you guys, what it shows is that we gotta watch the stocks more so we can get the dip. If you are realizing, man, this move already happened, or I wasn't here for this move, or I wasn't here for that move, it's probably because you're watching the highlight reel and not hitting the gym and looking at the defense, right? Watching tape. This is the part where we come in and we watch tape. If you seeing like it's an uptrend, this candle outstanding, this candle outstanding, this candle outstanding, boom, fired off there, right? We got an outstanding candle here. You do get washed there. It doesn't end up running anyway. So let's say, for example, oh, actually, you're good, right? You stop out of the low here. You don't actually get stopped out. You catch that. So shout out to us there. Same thing here. Kind of pulls back, goes up, boom, stop out at the low. You catch that nice rotational play right there. No break of high. There's a break of high here. You get a little push into the zone. So I don't know what you would set up. If you're setting up this rotation, it might even be a butterfly, but deeper rotations are good. Where's the rotations at? So this is one of those deep pullbacks. This was a deep pullback. You don't get this pullback, but you get this one, right? Let's zoom in here. So the pullback that happens is on 419. The other pullback is in around the 8.6 section and the 1014. Okay, you get the 1014 pullback. What does that look like on the weekly chart? Let's see. This is your 1014 pullback. This is the candle you're getting in right here at the bottom, right before you catch all of that. Nice juicy pullback on the 1014 candle, right? Now you don't get any indication on the 8.6, but on the 416, the 422, you're getting that pullback for a nice expansion. You're catching the wind before it explodes out of the lungs, right? You're catching it as it sucks it in right before it, boom, explodes out. That's the kind of the point. This is why the system works really good, because not only is selling coming in a little late, you're catching it as it's about to expand back out, and it's highlighting it for you, bringing it to you, and then you can make it the trade. The IOU formula in effect, baby, essentially. All right, let's go hit the flex grid. So that's Netflix. Not anything super substantial there. Google, like we see Google. Goog and Goog-L, little extended expansion on the moving averages, a little high, right? So don't go chasing it, just let it come and pull back to you, right? So that's Goog, TTWO. Now this, right, you can see like it's already pushing, but be mindful, right? You could put in a double top and then reject. So let's go look at that. Cool, right? Very, very large setup candle, not something that we necessarily like. We like our tighter setup candles like this one, and then it breaks and then pushes. We actually saw this. The only problem is because it was so close to earnings, we just chose to bypass. It was like, I don't know, because it could fail, right? Probably should have took it. There was actually another setup there, and then expanded upwards as well. So system in full effect there. Are these looks good? Do you have to get in right at the trend change? Not necessarily. You can get in on the IOU, right? Identify the trend, outstanding candle, you take the trade. Let's move on. Goog, we kind of already talked about that. There's Goog and Google. Disney. So this is another one. This is why I said that the XLC does have a little room to grow here. Nice push in Disney. Could pull back though, but it looks like it's respecting rotation, which is good. It is respecting rotation here on the weekly. On the daily, no real setup candles immediately, right? There was this one, but nothing materialized. We just wanted to see if it was breaking. That's why I have the alert there. Probably wouldn't have took that trade. There's not enough reward to risk. It's in this middle of fair value, but I'd rather see a setup candle at the base of support, right? As it comes in, pushes above, and then support, and then maybe it can push above to resistance, right? Like this one right here, kind of is above, puts in a red candle. There's room to grow and it expands outwards. That's ideal, but don't always get that, right? Buy the dips, short the rips, so to speak. So we need a little bit more rip, or a little bit more dip, in Disney for me to look at that with open arms there. Moving on from childhood sweethearts. You've got AT&T. AT&T, baby. Nice juicy pullback. Let's see what we're working with on the T. Nothing too crazy, right? I did put a halfway alert, what I call a halfway alert on large candles for the Fed share candle, right? So that was kind of a canary in the coal mine area. If you're not really out of danger area, if you can't get out of the halfway mark on the Fed share candle, that's kind of my thought process. It's not really, it's just something I kind of came up with on the fly there. It just gives me a way to put a line in the sand and make a rule and stick to that rule, okay? Not to just go by, well, I think it's going to go up. No, it hasn't even broke the halfway mark on bad news. So if the market doesn't feel like on bad news, this is the cost of bad news, getting halfway above that, I want to see it. It's like, hey, we're out of bad news territory. Okay, moving on. Verizon, new downtrend. Let's take a look at that. Big old VZ. New downtrend for Verizon. New downtrend for Verizon, guys. No setup candles here, but it is starting to rally. So watch for a rally into resistance with maybe a setup candle. This would be something that we would definitely love to take, right? Granted, though, if the XLC is pulling back, if we expect the XLC to move upwards, then the Verizon probably will get dragged right along with it. But as it starts to pivot, new downtrend, we might take that play. Ideally, I'd rather take a downwards play in a downward sector, like the ones we just looked at, like materials or the XLRE. But, what's here is here, right? So we'll see if that even materializes. It hasn't. But a new downtrend has materialized. That's good. T-Mobile there. So T-Mobile, I think we got hit on T-Mobile there. T-Mobile. Cool. T-Mobile here. Yeah, got a setup candle there, got stopped out. It happens, guys. Little nice juicy pullback, but this is at essentially where it had a very nice pullback. You probably should have respected that pullback a little bit more. Seeing how wide it was, and then this setup candle right here, as it broke the high of that, we took the play, got stopped out, and then we missed out on all this, which is good. That's why rules are also important on the upside and the downside. And I'm gonna always keep it real with you guys. If there's a stop out here, cool, we got stopped out and we let it go. It happens in swing trading. Not everything's gonna be a home run, slam dunk, or whatever. But once you let it go at this point, I'm okay with letting it go here than being forced to let it go down here. And then it just never really materialized into anything beautiful. So losses are lessons. Don't show me all your wins. Show me your losses, and I'll tell you what kind of trader you are. This is a loss, and look how did we follow our rules for the loss? Yeah, 2-bar professional. This would have been our stop. This is our second bar. We rode that. We bend. Don't break your rules. There it is. There's your stop. Let it go. Don't argue. Move on. Don't cry home to mama. If you set up your risk properly in the front end, you don't have to worry about it on the back end. Moving on. We're going to tap to Comcast. Made a killing on Comcast and Charter Cable. So the cable company's been coming in clutch for us. Let's go take a deep dive. If for those people who don't know about Comcast, I used to work for them a long time ago in my younger years. So CSA. Let's go take a peek. See how they're doing. Boom. Right, pretty standard, right? Who's really adding to their Comcast box? Not really, unless you're getting new revenue. Cash to debt, so we can tell off the bat, Comcast has been around, Xfinity's been around for a very, very long time. But when you see something like this, it just says, hey, this is a cash strapped business. When it comes to debt, they pretty much live off debt. Free cash flow is still positive, but waning, right? It's a gradual, like, ebbs and flows up and down with an overall downward suction. You do pay dividends though, but they can't be considered a dividend king because it's not necessarily rising. So long-term investment, shares outstanding is decreasing. That's not good, right? I mean, what's in circulation is slowly starting to decrease, and what's the demand is slowly starting to decrease. So, but there is some room. There is some room to grow. Where did that go? Yeah, pull that back up. And pull this back up. Okay, cool. We're back. So yeah, Not necessarily looking for much out of Comcast in 2025, but what I will say is it's in a good sector. So it probably won't completely explode, right? And then our money Mac favorite Charter cable. This one we made an absolute killing on this rip. This is what I'm talking about. Catching. This is like a picture perfect play, right? Catching the nice pullback, pulling the trigger on the proper moment. I cannot tell you how much. Yes, there's a pullback here, but without the system, you're not going to have the timing to make a informed decision at the right time. And let's go bring this guy to the front of the classroom. I love bringing Charter cable to the front of the classroom. It was pretty amazing. Okay, so ignore all these candles over here, right? New uptrend essentially back here. Forget that. Charter cable right here is where we took the vertical as highlighted in green. It's a green arrow behind the blue arrow and a butterfly. So if you are a fan of John Carter's system of the squeeze, there was a long squeeze. But if you notice, it was squeezing. It started squeezing all the way back in 10, 11. So if you take the buy, let's just say hypothetically, you take the buy at 10, 11, right? You're holding for essentially almost a week, 2 weeks. For options, it's just theta killing the mess out of your option. So if you've got a 1 week contract, that 1 week contract, forget it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of just choppy back and forth, rotational, no volatility at all, right? You get this candle, but that's not the setup we're looking for. Remember, I owe you. It has to be outstanding, right? Out of place. Out of place or outstanding candle. So identify the trend. Let's go back. Trend's green. Trend identified. Step 1, right? Outstanding candle. There's your outstanding candle. It's a nice, tight, juicy red candle in the middle of an uptrend. Uh-oh. What do we do here, right? Then it's up to you to take the trade. Now, yes, you do have earnings here. Okay, you do have earnings. We respect earnings by doing what? Risk management, family. Risk management. So if it crosses above that candle, you can be a two-part professional, maybe stop out below this low. That's as low as she goes, okay? But here we feel very confident, tight, juicy candle, breaks above, earnings coming up, maybe there's a leak there. We don't really care, right? We take the buy on the vertical, we take the buy on the butterfly, boom. Vertical, we roll it, butterfly, we close at this level. Granted, this took, instead of holding this for 11, 10 some odd days, we bought at the right time with the right setups. At the right time with the right setups, family. So this break above here, right, the squeeze doesn't even fire until it's all the way up here. We get in early because we have almost X-ray vision of what's going on, which is beautiful. Okay. Now we see it happening here and it fires, taking our butterfly off, keeping our vertical, and then taking another something off the table for this, and then end up closing in massive profits here. Okay, so really, really good play there on Carter. But I like to illustrate this because you get a heads up on the squeeze as well, right? You get a heads up on the squeeze as well. A really good time for us there. Let's continue. We just wanted to bring him to the front of the classroom. It kind of goes back into this whole idea of expansion and contracting your lungs. The market does the same thing. As it starts to contract, pretty soon, boom, it expands into a huge explosion. So that's kind of where you want to get into the plays, not after they've already moved. So that is the XLK and the XLC. Those are your major outperformers in the market. We're going to take a look at the now major underperformers. So we'll go back and look at our bar charts here. We'll pull that up for you guys. Underperformers. We're trying to look for things that are on the low, on the dip, right? You have healthcare and you have materials. So guys, healthcare and materials we're going to look at. We also have some in real estate that's starting to uptick a little bit. But healthcare and materials is bang for your buck. I don't know why I keep doing that. Closing my window. Boom. Okay, healthcare and materials. Let's go. Let's do that. Let's do the do. Healthcare and materials. Okay, healthcare first. Boom. Okay. A lot different picture, right? You see immediately a lot more red on the spread, right? Not pretty green over crossing green, right? Like this. Why is nobody talking about healthcare, right? Why is nobody talking about healthcare? I don't know. But healthcare right here is where you're gonna find all your major deals, right? Now we're gonna bring this guy to the front of the classroom early because we are in the play as it stands right now. So UNH, massive sell off, right? Hit major support, very major, so long term major support, and we went on and took the play, and it is It is as of right now doing okay, right? We're looking for a pullback into the weekly play. Now, if you notice, it is already crossing the 8 peer moving average on the daily, but we took a weekly play, so we keep the weekly levels. Okay, we took the weekly play, so we keep the weekly levels. Don't switch down if you are on a higher time frame. You can switch up from a lower time frame. So if you took a play on the 5 minute and now there's a 5 minute trigger turns into a daily trigger, then now you can take the daily. You can take the daily limits, but don't go from a weekly play down to a 1 hour play. Okay, you scale up, not down. We're thinking bigger here. Okay, let's go to UNH. So we'll pull it up on the weekly here. Let's do this. There we go. So on the weekly, we're seeing that how far it ran away from the expanding moving averages, right? We have the 8 and the 21 pulled up here. Downtrend, really far, really extended to 3 ACR, 3 standard, 3 what its standard move is for average range on a weekly, right? 3 times that essentially. So it normally doesn't get down into this territory, but when it does, you can take that back to the 8 period moving average and kind of use that as a reversion to your 8 period moving mean. It does something similar here, and this is kind of what we're going for, pulling back to the 8 period moving average before we look to let it go or roll it, right? So already it's up pretty nicely. If we go to the monitor tab here, we'll go take a look at that. UNH is up around 19%. So 19% on that play, looking pretty good. Also, XLC is up around 26%. So I don't know if how accurate that is, but UNH is up 19%, and we absolutely love it. Okay, 19% so far on the push. That means if it's moved from here to here at around almost 20%, it can get up to around 50% if it gets back to the high where, or the 8 peer moving average where it currently is. So we like to go based off percentages over here, and it's looking pretty good as of right now. Okay, rolling back. So XOK overall, let's still take a peek. As you can see, rotational support right here, coming in, boom, and respecting it over the last 2 weeks. So could there be a bounce? Maybe, maybe not. Right? We're gonna go by what it says for the technicals. Right? You're in a downtrend. We want to short the rips. We don't want to buy the dips unless there is just extremeness going on. Case in point, XLV. We recently made a very good play and took very nice profits on XLV. Very nice, and avoided the rip there. Here we go. Okay, so on the daily, let's go take a look at it. Roll to the right. There we go. Boom. I don't know why I jumped to the middle, but we're here. So XLV, what do we see? ILU, straightforward, right? Negative trend. We have identified that the trend is now negative from the weekly chart. Now we come down to the daily, right? We're looking for an outstanding candle or an out of place candle. These green candles are out of place, these two, right? So this new trend with a nice rip, decent rip, okay rip, right? And then it's on me to now set my parameters for the trade, to figure out my risk management, my stop loss, and my trigger entry. So my trigger entry, as you guys know, is a break of the low, right? we want to short the rips. This is your rip. We want to short that as it gives me my trigger. There's my trigger. Stop out at the high. Runs 1, 2, 3, 4, 5, 6 days before it gave any sign that, hey, it could be pulling back. We want to get out of the way of what the market is telling us, not what our heart is telling us to do. So the market is telling us it's pulling back. It's pulling back. And as you can see, there's some follow on for the pullback. Okay. But we had already made our money. We had made our money, rolled it once, rolled it twice, closed the position here. Okay. We'd already made our money. So when people say being greedy, it's hard for us to be greedy over here because a lot of times with your rules, you're managing more profits than losses. You're really managing how you perform with your profits. So very nice push out the gate. We wanted to take it off at the first sign of danger, the pivot low, the rotational low, the support level, excuse me. And so as it got close to that, we took some off. It went down, continued, hit another support level. We went on and took some off. And as you can see, it worked out really well, right? It worked out really well. Essentially, getting in puts or a vertical for puts at 149.28, and the lowest where we're taking it off is 141. Okay, are you okay with getting a $9 move? When's the last time you guys got a $9 move? I know we like to get those pretty regularly over here. Okay, so day trading's fun, but getting $9 moves and you just throwing your net out there is also pretty sweet. And notice it didn't have a whole lot of dilly-dallying. We like our downwards plays a lot of times better than our upwards one. We just get paid a lot faster. We like that, okay? So XOV overall, there it is. E-Lily historically made some good money on the way up, on the way down. You could have made some money on the way down as well. We got caught on the trend change here. Wasn't a good look, but we had good risk management. So it happens. Gaps are ever present in the market. But as it stands right now, kind of trading between this, it's kind of in no man's land. So if you want to take something like this, right, you can say, oh, well, it can come down and pick me up. What level do you want to come down and pick me up? Well, that would be a 751.98. Okay, 751.98 is a level you can come down and come pick me up if I get a buy bias. And it's in line with some other chart patterns. This would be a double bottom. Would you be okay with saying, hey, I let it come down and pick me up for a double bottom at recent pivot lows, right? If anything, it gets back up to the rotation. If anything, it gets back up to the 8-period moving average. So at least you're not immediately going into a drawdown, which is good. What do we see here, family? We see a trend reversal on ABBV. This is why we do these. This on the daily. Never mind. Take that back. So let's go back. ABBV. See what we are on the weekly. Yeah, we're still negative. We're still negative here. Yeah, we're still negative. But depending on how you trade, right? Maybe you can use the daily in the 1 hour, or the daily in the 4 hour kind of deal. In tandem. You don't necessarily have to take the weekly and the daily. I do that because I don't like the day trade. But let's say, for example, that you did want to use ABBV on the daily for a potential setup on the 1 hour. You can do that. That's totally okay. You can use the same system. IOU, right? Identify your daily trend. It's starting to go green, right? Now, outstanding candles on the 1 hour or outstanding candles on the 4 hour, and then you take the trade as you see fit with your risk management with a proper plan. Okay, you move in that direction. Okay, so it's in effect on the daily if you want to do that. Okay, same thing here for United Health. We kind of already covered that, brought it to the front of the classroom. Merrick, same thing. So the sector overall, if you're looking for down plays, don't look at the XOK and be like, oh yeah, I want to take a down play in the XOK because it's overextended. Why don't you look at these guys that are already in negative territory and look to short their rips right here. Prime example, outstanding candle right here, break up low, take that or take it on the pullback, whatever, with the stop out at the high. Cover your risk management. And then wham, absolute failure. You caught this rip here. Now, you might take this, it kind of rolls against you. You see that there, it happens. But once this play comes back into focus here, taking that, you get a nice healthy one. You just got to set your net out there and forget it. There's your play as it breaks the low there. Stop out at the high. Does it come up? Gets close. Keep your net out there. Stick to your rules. Stick to your setup. And then wham, it falls through. You probably take some off at the bottom here as it breaks this candle. Roll it. And then it just kind of keeps going. Look how long that play would have lasted in Merrick. So simple. IOU. ID the trend. Outstanding candle. You take the setup if you feel like it's a good one for you and your portfolio. There's Merrick. Let's continue on. J&J. Oh my, look at this is, bro. J&J. Let's go play J&J. Made crazy profits on J&J. Essentially, same thing that we've been telling you. I want to showcase these because this is what we're talking about, J&J. Look at that. ID the trend, went down, nice pullback. You see the pressure in the pullback, right? And then here is a setup candle here. Took the play, stop at the high. We actually kept our alert there, so you can see. Didn't really fumble with it. We just pulled this up. And then boom, boom, boom. Took it off because we literally had to close it, but this was a good time to take it off anyway, right? We just want to, it's like, hey man, we've been in this play for almost 4 weeks. Yeah, that's insane. 1, 2, 3. Yeah, this was close because we had to. And we didn't want to roll it or roll it out longer because why? You're at 3 ATR. You got all the meat and the bone on this play. You set it up. There's your rip. You have a setup. Wham! Right? We're talking about 155 going down to 143, family. That is what we can do when we just follow our rules. We don't have to be mega gurus in NVIDIA or Apple. You just have to have a system, a plan, and stick to it. Okay? That's what we're talking about. We're changing a lot. We're going to change lives over here because people are going to see very quickly. We live in a world of abundance. Keep it simple. Keep it simple, silly, right? Keep it simple. Keep it simple. That's what we're going to say on that. I bet you if we look in this one, you'll have the same thing. TMO. Let's see. So there's a downtrend. There's a slight rip. You don't get a setup, but you do get blowout candles here for you to go ahead and get out, right? So the setup works on the reverse. So like, let's say, for example, you traded it from a traditional standpoint. There's your rip in the 21 and you set your own alert for the break, right? You don't have to necessarily wait for my setup. You can say, okay, I know MC Fire was saying, hey, it takes a dip and look for a rip into the 8, into the 21 as it starts to fail. I'll just put my own setup candle here. That's still valid. That's fine. As long as you make a plan. You say, okay, I will be a 2-bar professional. I'll enter here. I'll be a 2-bar professional. So either your stops out here or at maximum, here. If it breaks above the 2 bars, Audi 3000, okay? ABT, not really much to talk about here, kind of treading water in this zone, but could see some potentials in the XLV, right? Because everything is so in the dirt for the XLV, this could be something that you can put into your portfolio for a long-term buy and hold as it recovers, as you see maybe some baby boomers go into retirement. That could be a thing. Now, this is something to watch, right? You get ISRG. Let's go take a look at that and bring him to the front of the classroom. Or current play, right? Now let's go back, find our trend. We're gonna do it the same we've been doing. Now this is what I call an outperformer in the sector. Outperformer in the sector, family. We have where the sector is red, but look at this guy. This guy looking like he should be in the XLK and the XLC. Look at him, just crushing it, just absolutely crushing it. If we go back to our flex grid, right? He is momentum is red, trend is yellow. When you look, this is on the daily. Let's go look at the weekly here. What we normally would be looking at. It's double green, okay? It's a double green look. So we see this. I'm not sitting here like, just go look over it, because why? The whole sector overall is pretty much red. This is the only stock that's in what looks to be double green territory. So we're going to bring him to the front of the classroom. Imagine if you're in the class and it's Boo Boo the Food class, right? Red, 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 red. This is the teacher's pet in the class, right? So everyone's going to copy his homework. This is what we're going to do. ISRG, right? ISRG here. Let's see if we've got a potential play in ISRG. Look at that. So it did kind of give an opportunity to take the trigger for the IOU, right? If you look right here, IOU here, boom here, right? All the good stuff. But IOU is in play here, right? We identify the trend, green. Outstanding candle, boom. Starts to buy, now there's a trigger, right? Pulls back a little bit, but now we have a second opportunity for entry. So let's say, for example, if it breaks high, you can take that position to the upside. We'll put the alert right now, right? If you take the position to the upside, you, being me, will take this maybe for a butterfly, look for the high at 556 to be tested. And, it's a fire and forget because it's a butterfly, low risk, low reward. So what does that look like for us? Let's see if we can set up that trade for you guys now. Maybe put it on for 11 days, nothing too crazy. We'll go down, right? So options are a little expensive on this puppy right here, but what price are we targeting? We're targeting 556. 556 as it stands right now. 556. Go back. Ooh, what are you doing? Ooh. ISRG, yep, trade, thank you. 556. 555. That's close enough, right? So let's say we take we're coming here. This is on the sell side. We'll need 2 sells. And then how wide are these? They're 5 wide. Okay, that's fine. So we'll do 1 buy and then another buy. So now it kicks, it says butterfly, okay? All we did was we take 2 out of the money buys and 2 out of the money sells on contracts, okay? 2 out of the money buys, 2 out of the money sells. Look how much they cost. One of these contracts for way out of the money is $660. But the way we set it up, it's only $15 to set this play up. Now you looking at this is like, oh, at the money is $13.60. Out of the money is $660. But with the butterfly, it's $15. And you can be in this play for the butterfly. Let's go analyze what we could potentially see as a return for this play. Okay. So this is why butterflies are really good for building small accounts into larger accounts, right? With $15 investment, family, you could potentially see a return of, at expiration, if you hit bullseye, $435. I said that correctly. The most you can lose on this play is $15, but a maximum, if it hits high at expiration, is $446. This already is worth the price of admission. I hope you guys are paying attention. The most you can lose on this play is $15, but the most you can gain is $446. That's what we're talking about here, okay? So when you go and look at this and you're like, oh, wow, right? I'm targeting this area up here, right? 4 above that, 4 below that, then, the highs, 4 above that, 4 below that. If it gets back up to highs and you put your alert there, you can take that potentially off and make good profits. You can take it off a little bit before as it pushes that direction and see returns before it gets over there. So let's go back to the Analyze tab. So you can see the cyan line here. You put the play on at $15. Let's say, for example, it just runs to, not saying that it would do that, $5.49. You're going to make $1.96 on the play if you pull it off right there. And of course, the bid and ask is reasonable, right? But that purple line expands upwards, meaning you get more profit as theta, right, happens, right? You got 2 cells in that play. So the more time it takes, the more profit potential. So the blue line, the teal line, I should say, the reason why you get so much profit is because you're profiting from the out of the money calls as well as the two out of the money sell protection play, right? Because you essentially took two out of the money calls and sold two out of the money calls. You bought two out of the money calls, you sold two out of the money calls. So the two out of the money calls that you sold, those calls also are making you money as time goes on. And then as a play's price pushes up above your out of the lower out of the money call that you bought, that also is where the big money comes in. So, and that of course is going to be at the lower bought out of the money call at 549.43. Okay, so if it gets above that, you're already going to see some significant profits. Let's say at expiration, it's in that strike zone. You're going to see $43, right? If you think that $43 in comparison is bad, when you consider that you put it on for $15, you made 100% and then some, right? And if it keeps going at expiration, if it gets within the window slightly higher, you're looking at 169. What I'm telling you is, listen, the opportunities here are endless, right? The right setup, the right plays can change your life, family. What looked like a play that could not be affordable for most or a lot of people, 1,300, right? Or even out of the money play, super risky at 660, turned into a play that most people can afford. A $15 play that can essentially maybe pay them out $400. Okay. I'm glad we brought him to the front of the classroom because this is an outperformer and we love to see it. Okay. Can't never say I didn't do anything for you. So that's going on there. Let's continue. We've got PFE. So PFE got a little bit of a trend change on the daily as well. I need to change some of these to the weekly. I want to see what the weekly is looking like. Still in the dumps on the weekly, so nothing to write home to mama about other than the support at 15.14, with maybe a rotation up to 31.58. Okay, so it could bounce off support, go to resistance. That's all you're gonna get from me, folks, unless we start seeing some really juicy rip action for some puts. But other than that, not looking forward to the Pfizer Dizer. DHR, kind of a rip into the wave. So maybe you can get some juice going here. Let's see what we got on the weekly. I don't think there's a trend change on the weekly. No. Playing around with the 8-period moving average here. If we go ahead and mark some of the levels, I would say that let's see, we go left to right, higher time frame or lower time frame. Yeah, not much here, right? You definitely would want to take a rip there for sure. I think where do we get smoked on this one? I can't remember. But yeah, PFE not looking too good as regards to something. We're just waiting for a rip on it. DHR, same thing. AMGN, same thing. Waiting for a rip. This is kind of what we want to see. It drives down, pushes nice rip into the moving average cloud there, and then wham. Let's go take a look at what this looks like on the daily just for reference. AMGN. Cool. Yep. Nice rip. Very nice setup. It already gaps. We didn't chase it. But yeah, pretty straightforward there. Took a nice nasty dip, trend change there, nice rip, right? And then if you put an alert here, when it opens down here, right? Or actually opens down there. So you would have to front run them. There is no trigger break. That's the problem. So yes, it is there. It's just a little misleading. But that is the result, essentially. Setup worked pretty nasty. And we're back. So we're gonna hit also the XLRE. Yeah, we're gonna hit the XLRE here. Let's see. Real estate. Yeah. All right. So real estate, a little bit more of a mixed bag here. You got some red, you got some green, right? A little bit more of a mixed bag. But overall, XLRE on the weekly, where are we looking? Basically downtrend territory. Your real estate ETF is in downtrend territory, right? And this is kind of what we're looking at, right? You see this IOU, very simple. Then this guy sticks his ugly head out, and you could have took that to the downside. Um, didn't want to stick our neck out, potentially to get popped in front of rotation, but it did actually fail pretty admirably to the downside. So because it did that, the play worked out really nicely. The IOU is in full effect. We just us didn't take the play, but it could have worked out pretty good, going from 42 all the way with a second blowout of around 40, right? So $2 move, but depending on what your leverage is, that pays bills. PLD. So let's kind of go through here. We see that downtrend setting support at around 182. But it's already, the moving averages are starting to compress a little bit. So we'd want to see a little bit more lift in it, or set up before it starts failing. We want to see, when I say lift, kind of lift up into the 21 period moving average would be more preferred, as opposed to just at the 8, right? So we want to see a little bit higher of a lift before it fails. PLD on the daily, let's go investigate that and see how it performed that way. Let's go back. PLD. Yeah, we like that. We like that. All right. Definitely a downtrend. But we can almost see the rips, right? Downtrend. Let's go mark those downtrends for you guys, because I don't want to be crude. Let's just get to the marking it, so we can see what we can see. Boom. There's your downtrend there. And when we hop over to the daily, it's pretty obvious, right? There it is. Boom. Right. You see your setup candle went flat, slight lift. Boom. Sell. Stop it at the high. What does it do? Fails. There's actually an opportunity to add if you take that. Nice little doji, right? 2-bar professional. Stop out there. Fails. Blowout candles right there. There you go, right? You can do this all day, right? It's right in line with also the squeeze. But again, 1-2 days of access squeeze, you know exactly what day to get in, you know exactly where your stop loss is, you know exactly how it fails. Let's push on. Wells, same story, looking for a rip, probably happened around there. We don't have to take a peek at that. Equa. So this is one of the ones that we're like, hey, this could be trend changing to the upside. Let's go take a peek, bring it to the front of the class. Actually, you can do it right here. Put it on the weekly. Yeah. So it's been in an uptrend for an extended period of time. That's good, right? We're in uptrend territory. So when you look at EQIX. When you look at this, right, on the weekly, you're like, man, this thing has been an uptrend, even though the stock or the ETF has kind of been running sideways. These are the ones that you want to look at as like, okay, let's bring these guys to the front of the class and see their internals, right? Got the green there, cool. We'll go look at the setup candle, see if there's any setups there. Not really. There was some indication that, hey, the people could be stepping in. They did. It didn't look too bad, right? But once it starts trend changing, set up here, you kind of know what to do. Set up here, you kind of know what to do. Set up here, you kind of know what to do, right? Plenty of buying opportunities there. Nice juicy rip. Buying opportunity here. Get some follow through, not much, but here, take it off at highs. It runs, goes sideways for a little bit. If you have it for legs, it's gonna go higher, so that's good. Let's go bring this to the front of the classroom, EQIX, and see, can we do something with this, right? It's a little pricey, but I don't know how big some of your wallets are out there, so let's go look. Right? Some big companies out there, right? Revenue growth slowly. We like to see this. Now, this is a problem, right? ECL is jumpy free cash flow. Don't like that. Dividends looking pretty good. Cash to debt, there's literally no data. So I don't know how you feel about that, right? Income, though, looking snazzy. But why is your free cash flow looking like that? Like, what does your market structure look like? Shares outstanding, no data. So we want to see shares outstanding increasing, cash to debt decreasing, or cash to debt increasing, excuse me. The net income is good, right? The revenue is good. The free cash flow, no bueno. Look at that. Free cash flow is the lifeblood of businesses. So It's how you pay debts and stack cash. Like, what's going on? So, not liking what I'm seeing there. And also, let's go look at ISRG because we brought him to the front of the class. Okay. Ooh, look at that. Loving it. There's almost no debt. Revenues increasing, net income increasing, free cash flow not looking too bad, right? Shares outstanding kind of staying stagnant. It is what it is. Expenses not looking too bad, decreasing relative to year Q4 of last year, so that's good. Let's see what we got. Employee count increasing. I'd say that's good. Prediction: two stocks that will be worth more than Palantir 5 years from now. Interesting. Healthcare stocks to buy with $1,000 right now. So people are saying this is something to probably make something shaken. Three robotics and automation stocks for the next AI boom. So they're calling this the next AI boom. Well, it's $535. Better get the booming. Hopefully we can see maybe something. You put this on your watch list, ISRG. Put this on your watch list as a potential something for maybe a stock split. Because if you're getting news like, hey, you're gonna make AI headwinds, then they might be able to take that for potentially a stock split where getting in at reasonable levels for even us would be pretty sweet. But until that happens, we could just essentially, just trade it for what we can trade it for. Put a nice options play on and let it do its thing. Yeah, the ISRG. Yep, yep, that's the one. Yep, so making sure we got that good to go. So we'll go back to our flip screen here, and we'll keep it pushing. Not too bad. DLR. What are you looking like on the uptrend here on the weekly? Looking good on the weekly. Like it. DLR looking good on the weekly. We'll hop over briefly. Little bit of a setup candle here as it is pulled back in here, but it pretty much didn't do anything with it. This is the problem when you kind of step into the laggards. They might throw a setup, but the follow through might not be as pronounced. Now, when you combine your ETF that's in a downtrend and your stock that's in a downtrend with a downtrend setup, that's when things get interesting. So yes, DLR is currently, looking good on, let's say, for example, a weekly chart, green, but long-term green. That's good and all. But when you talk about, like, let's say this might be one that you want to put into a long-term buy and hold, right? Seeing that it can hold its own nose in the sector, even during a downturn, that is where I think its most potential is for a stock like DLR. Okay. But for an option play where we need that volatility, we need the stock to really move. We want to buy in ETFs that are in uptrends, stocks that have uptrends with setup candles. And then that's when you get your big move. It works the same way in reverse. If there's an ETF that's in a downtrend like XLV, and then Johnson and or not Johnson, if you get a setup candle to the downside and you take that, then boom, you can see some pretty good results. Like in the XLV, Johnson and Johnson was in the XLV. We saw that setup candle, we took it, it ran magnanimously. So that's where the magic happens, combining a downtrending ETF with a downtrending stock, and it has a setup, right? Short the rip, matching all of those components, all of those beautiful components to make one masterpiece gold trade that can pay you and your family for the rest of your life. Okay. So yeah, DLR here. We're going to continue. AMT, right? Very probably pronounced example of our setup. So AMT, let's take a look if there was an opportunity to take that on the downward spiral there. Right, weekly downtrend here. The real question is this setup giving you a heads up? Hey, people are a little extended here, and this is what you could get into the play, right? So yep, downwards play, but let's say this setup is here. You take that 2 days of follow through. it depends on if you're a day trader or not, if you take something like that. But it just kind of rips a little bit and then starts to fail. Okay. There is no setup here for the green candle, essentially. There is one here. You get 2 days of follow through, and that's all she wrote. And let's continue on. Simon Property Group, right? We do like Simon Property Group. It is in our portfolio. We've been watching this puppy for a while. Would love to see this go ahead and go green and stop dill-jacking around here for Simon Property Group. So let's go take a look at that on the weekly, right? Weekly is looking good. Love the SPG. And then we can go pop over to the daily. So, right, there was a little indication that, hey, interest might be increasing on this puppy and has since pushed. Want to buy the dip. If you want to buy it, it's not too shabby, but still put a plan in place. Like if you buy it today, stop on at the low, call it, man. There's no real reason to hold things if they're not working out. Simon Proper. Good. Right, and I think they also have a show out too, which is pretty cool. Revenue not looking too bad. Free cash flow looking not too bad. Cash to debt, obviously, real estate is a heavy debt business, so this isn't outlandish, right? Dividends not looking too bad, slightly actually increasing, which is freaking phenomenal. Shares outstanding flat, and then let's see what the news is. State of REITs, 3 REITs to sell before 2025. Let's see that. Maybe it's a no bueno. Get into it here. 3 REITs to sell before 2025. REITs have strongly recovered. As a result, some have become overvalued. I highlight 3 REITs to sell before 2025. So this is one analyst saying sell it. Let's see why. Let's get to our REIT. We don't have all day here. We got Welltower, Extra Space Storage. Where's Simon Property Group? I just threw some random REITs in here. I don't see ours. So yeah, thanks. Thanks for wasting all of our time seeking alpha. Good shout out to you. So yeah, they didn't even include our guy. Super weird, man. I don't know what to tell you on that, guys. But yeah, there it is. I like to take a look at that live with you guys because it's like, hey man, you're seeing me do it, so we're kind of going through it together. But that was just weird. All right, SPG, we're continuing on. Easy day. So PSA, as it fails, not looking too bad. It's setting a rotation here. So think about it like this: if XLRE is, and this is public storage, one of the ones that were saying you should sell, well, it's already kind of sold off, right? So if it's selling off and starting to set in a accumulation stage, you're saying sell it and it's already low. Look, like, what are we doing? Right? If we can look at it, PSA. Right, PSA. You come take a peek on the weekly. It's in a downtrend. It's at 3 ATR. In the short run, do you sell it or do you just wait for the rip? I say you wait for the rip, man. This is where you get to use your own discretion and not just take what the news is saying, right? Because most of the time they're reactionary anyway. So they're saying 3 to sell, and this might be one of them, but it's already sold. So this is why we don't really trade unless there's a catalyst, like something was new and approved, like a merger or a stock split. Some people get excited over stock splits. Don't know why, but they do. But there's not enough rip here to justify taking a short position. There was actually an indication that you could take some downside. There was also, if you got the trend change on the day, boom, take that sell, right? It was a setup candle there. So on PSA. And it was tight too. That was pretty sweet. We are a big fan of O. We like buying O. Let's go show you why we like buying O. Go take some O. This is one of Ice Q's first like REITs. It has a special place in our heart. But when you look at the revenue, look at that revenue increase, look at that free cash flow increase, right? So long-term buys, yeah, the debt, the cash ratio, this is a real estate business. But look at the dividends. Look at that. This is kind of what we're talking about long-term buys as a regards to your free cash flow is increasing. Free cash flow is increasing, not super jagged, increasing. Let's see if we can pull that whole chart out here. Pull it out there. There you go. So free cash flow doing wonders. They're doing something right to get free cash flow to go almost hockey stick parabolic, or the start of it, right? So we're loving that. We're loving the dividends growing, right? And we're loving the cash to debt ratio growing. So looking to get it at a discount. Oh, $53. Want to add it to portfolio. Not necessarily a growth company, but for dividends, phenomenal. Get some while it's hot, right? Shout out to us. Doing that. And shout out to Ice Q for, finding this puppy when it's super, super cheap. Right? Super, super cheap and super, super good, right? Downtrend, 3 ATR, be a great opportunity to take some buy on that. That's for sure. We love O, and O's done really good for us. So just average in at the low. Like, wait for it to come down and pick you up. Not too bad there. CBRE. Let's go on the weekly here. Nice, very nice uptrend here. Very, very nice uptrend, right? So again, nice juicy pullback. Wait for the setup to occur, right? Wait for the setup candle. You should be fine. Or if you feel comfortable, put your own plan in play. But CBRE is looking pretty good, right? Looking pretty good, right? There was an indication that there might be some interest here for the setup, so that's why we have it there. But yeah, didn't really get up the halfway mark on the Fed share candle on the 18th. So that is something to watch. You can put an alert there, like, hey, if you get above it, I'll take the play, stop out at the low, I'll let it go, buy and hold kind of deal. That's how I would look at it in this guy. Or take that break, a butterfly at the high, stop out at the low. Really, butterflies are just fire and forget for me. Crown Castle. Obviously, you can kind of see even without us pulling it on the weekly, yeah, this thing is in the toilet there. So you can find some jewels, but not too many diamonds in the rough. That's for sure. AVB, really, really, ping pongy. Very long term though, because the low of this is like 216.09. The high is like 230, 239. So about $20 of rotation there, give or take. This is at the point where you could necessarily take that, but I would need to see some buying pressure there. With it being green, right? Setup candles are in effect that are red, for sure. So, boom, there's part of that rotation, and then obviously at the highs is pretty good. We got our training wheels on there, boom. And so if it can bounce off rotation and start throwing setup candles our direction, we kind of want to see that ABB, right? We see it here, right? That could be like if you were looking for the rotation, right? Buy, sell at the high kind of thing. Buy, sell at the high. So you get another look at it, and ideally you want to bounce, buy or step in and go. If you get another look, you can say, okay, well, you've tested the bottom here. So you hit the bottom the first time, hit it again. If you break above here, these guys didn't get paid, and these guys are in danger of getting washed as well. They could let go of their positions, fueling your rally up to the highs. Very similar to here, fueling your rally to the high. You catch a nice windfall there. Okay, so essentially just rinse and repeat kind of deal. If it happens, cool. If it doesn't, let it go. Easy D. And we're back. So those are the major laggards. We're just gonna pop over and look at some of all the other ones, right? We're not gonna go through each individual actual individual stock there for time's sake, but we will go and hit everything else so you guys can see it, right? You can see what's kind of outperforming, what's underperforming, right? XLB, really, really nasty pullback in the XLB, right? Materials is one of those laggards. Actually, it's one of the major laggards materials. So we might have to go through this. And this is one of our more longer videos because we want to show you guys pretty much everything out there in the market going in for the month. Our monthly videos are really more of a longer deal, right? We want to give you the full experience here. So Lynn, not too bad. In a downtrend for the week, but look for some rips on Lynn into the moving average cloud. If we can get some rips on the moving average cloud, awesome. If not, it is what it is. Same thing, XLB kind of getting dragged down. So you're getting some trend changes, and that's to be expected, right? Sherwin-Williams, trend change on Sherwin-Williams. So XLB really looking or struggling here. So we could start seeing, do your homework, watch XLB for potentially some rips to short into, okay, as it's starting to do the trend changes on these. Okay, here's a trend change. FCX, right? Freeport McMoran, trend change. So we start seeing some rips in the XLB. You might find the weakest stock in the XLB and pounce on them, right? Where's the trend change? Right there, cool. So watch out for that. APD, not quite, but if the rest of the ETF sector is kind of going along with it, then it's well within line. Let's see if we can find some outperformers. You'll probably be able to find them faster than me. Newmont, same deal, right? CTVA, same deal. As it starts to make these trend changes to the downside, look for opportunities to short into those rips. So you can see here the downtrend starting to set up. It pulls to the downside, then it rips up. You take the play to the downside, you roll, and then you're starting to just see massive profits there. Trend change here on VMC. Now you notice something's different on VMC. What's that? It'll come down here to a slight trend change, and it'll give you a nice juicy fake out. This is why we have the weekly chart pulled up as opposed to a daily, because this will chew you out and spit you up if you're on a daily trying to fight and trying to identify the trend. Just take the weekly, and we have the 8 and the 21. We also have, I believe it's the 21 and the 50 cloud. Yeah, 21 and the 50 cloud pulled up there. So it's not as though it's out of the realm. To get some more clarity, you just put on another smoothing average, right? Another moving average. Same thing for MLM, Martin Millet, okay? MLM. That currently also is setting up potentially for a weekly downtrend, right? You see the red cross right there? We're going to go ahead and put that. So shorts into that if it can get out of the danger zone. But keep in mind, right, there is this is support down here, so you just got to watch it, okay? It might not be picture perfect. DuPont, new downtrend, selling off pretty aggressively. Okay, DuPont selling off pretty aggressively. When DuPont sells off, there a lot of times in my history of looking at DuPont, once it sells off, it really kind of gets cranking. It doesn't have a lot of opportunities to just buy that rip, right? You're almost gonna miss it. So you sell off, decent little rip, but it sells off immediately. It's heavy, boy. It stays heavy. So DuPont, watch DuPont. You got DOW. Let's see this here. Trend change. It's been trend change for a while. It went in there, did its trend change, and there was plenty of opportunities to go ahead and catch some rotation back here, and then it just kind of failed. So let's kind of bring him to the front of the class and see what happened there. DOW. Okay. DOW, new downtrend. Opportunities to go ahead and take that sell out the gate. Boom, there was one. Rotation to the pivot low, there's two. Same thing. Doesn't really get a follow through there, but this one does to the low. Shout out to it, right? This is kind of why we pick the low, because if it's going rotation, you pretty much get out and start taking profits at the first sign of danger. This actually is very valid. You've already broken that rotation there. Had a rib, broken that rotation. It's in play. It fails. Stop out at the high, maybe 2-bar professional, and then it really goes just imploded. So really good opportunity to take the down to the downside there for sure. Okay, what else we got? I'm back to the ETFs, right? Didn't take too long, but with the way you can set this up is with the momentum and trend. See, you have a snapshot to you can say, okay, from our bar chart, here, we know for sure that which plays are up and down or lagging or kind of in danger. So we can jump and find our outperformers in that sector for maybe some long-term strategic buys. If when the rest of the sector is down, this is outperforming, that is your A student, that is your teacher's pet of that ETF. So we like to crack open the egg, see what's in there, and kind of move forward there. Let's see. That was XLB, XLE. Right, you're seeing kind of a mixed bag there, but your outperformers are KMI. Take a look at that. A BKR outperformer made some really good money on BKR as an outperformer. Shout out to it. OKE setting up potentially. EOG is going into a kind of a wedge. Nice rotation there, so watch out for that. WMB that has kind of pulled back into the 8, pulled back right at the 21, and is bouncing outside of that. Double green as well. So not looking too bad at all for that. The XLE, watch out. The heavy hitters though, they're struggling. You've got XCOM Mobile not looking too good. Chevron not looking too good, right? COP also ConocoPhillips really ripping to the downside, breaking that rotation to the downside. So we profited even though, in the outperformers. Let's bring him to the front of the class and kind of see what went right if it's the same thing we've been doing, right? BKR. We don't have to get everything perfect, the biggest rips, but we can get something like this and be just fine. BKR, nice juicy little setup candle out in open waters. Picked it on the right day within 2 days, bam, right? Went up a little higher, bam, sold most of it or got out, I think, at 3 weeks or whatever. Yeah, essentially 1, 2, 3. So we're out pretty much at the high 3-week run all the way to 3 ATR. Are you okay with taking a $38 play and then always profiting all the way up to $44? Okay, that's kind of what we like to do over here, and just set it up the same way, man. It's the simplest of systems. It's not going away anytime soon because it's simple. It's a simple way to look at the markets. You got an uptrend since, let's say, back here. How many opportunities do you get to get in? How many opportunities do you get in versus how many opportunities do you get to get stopped out? Even if you take every single opportunity, which I wouldn't take every single one, like this one I wouldn't take, but let's say you do, right? There's no trigger to get in there. There's a trigger to get in here, but you get a small stop out there. There's no trigger to get in that, right? There's a trigger to get in here. Boom. You get a nice 3-day, 4-day rip there, right? You roll forwards. No trigger to get in here, but there is a trigger to get in here, right? Breaks the high, stop out at the low, get a nice rip there. Let's move forward. There is a trigger to get in here. No real follow through, stop out at the low. Are you okay with that? Right? That's from what? The entry of 36.52 down to 35.82. You okay with that? Like, stop. Okay, cool. Let's keep going. Even if you do a 2-bar professional, right? 35.2. Are you okay with that stop? Most people would be okay. Let's say you take the next one, stop out at the low. Boom. Very nice rip. 2-to-1 risk to reward on that would end up being, because you're looking to the left, you're looking at the next pivot. This is where you're shooting for anyway. You have an opportunity to add. You have an opportunity to get in here, getting tight as it starts accumulating, right? Buying pressure setting in. We take the best of those buys coming out of a squeeze because we're kind of picky, and wham, going parabolic, going hockey stick. This is the one we took, right? All these other ones we could have took. We just took this one. There you go. Okay. Bringing it to the front of the class because this is, you have plenty of opportunities in what looks to be this weird choppy action, but with our setup, it brings it to you. You get to see firsthand how it works. Okay. What else we got? Let's go back. So yeah, we kind of hit on energy. Let's touch on the other guys. We're gonna kind of roll through here. Um, it's gonna kind of be of a speed session here. We're gonna get through this. Already hit the XLI industrials, right? Industrials could potentially be a trend change on industrials. So, but if let's say for example something happens, we remember we have a buy bias on Boeing already, right? Got some nice juicy action on Boeing as it stands. LMT, watch that for any conflicts, major pullback. Already in LMT, we'll be looking for that. If and Raytheon. So look for Raytheon and look for Lockheed Martin. Any major conflicts take place. Those are major defense contractors in their sector. Boeing as well. But Boeing just came out of their strike and saw that rip. We kind of bought on bad news. Union Pacific though struggling a little bit. We have John Deere and Caterpillar kind of in the same boat. Massive sell-offs there. I'm not sure if that's seasonal rotation or whatever. GE kind of same deal. Now you can bring HON to the front of the classroom and do some investigation on HON. But overall, kind of avoiding the XLI as it stands right now. Focus on the outperformers in underperforming sectors and the buy the dip opportunities in some of the best sectors. That's what we're going to focus on. We've got XLP, consumer staples, right? So here we got XLP, consumer staples. The issue with the XLP is that, now that the holiday seasons are done, is Walmart, is the Costco's of the world holding up, right? Philip Morris, you got Kimber and Clark, Target, Target here, right? Are they going to hold up now that kind of everything is over? You got MDLZ, massive sell off there, insane. Coca-Cola Company, Ultra. A lot of these places are a lot of these companies have been selling out. Now you do see the kind of outperformers, and they're not pretty, right? You got Walmart on a double yellow and Target on a double yellow. For that, let's see what they are on the weekly. We can pull them out, bring them to the front of the class here. On the weekly, probably not too much better, right? Yeah, you're in a downtrend there for Target. Let's click through to Walmart there on the weekly. Might be a little better there. Yeah, so Walmart looking pretty good on the weekly. Not too bad. Nice pullback. Let's bring Walmart to the front of the class here. Okay, Walmart not looking too bad there. You do have a delayed candle like rip. I didn't think that was gonna fire up. We saw that coming to the fruition of Walmart, and as we guessed, not much play there, right? You got the Fed share candle you had to watch out for, and it kind of did follow through considerably with nice pull straight to the downside. So I was a little bit more cautious. I was like, yeah, we gotta wait and see what happens, and this is the what happens. So shout out to that. But if you do take the Walmart for a buy, right? I would take this probably another one of those juicy butterflies, low risk, high reward setups, fire and forget. Just looking forward to the market to see if it wants to test highs off a break. These guys really haven't gotten paid. These guys have, but these guys, if you stepped in the position here with massive shares outstanding here, you didn't get paid. So you're underwater as of right here. And so if it starts getting above, all these guys are underwater. Maybe they let go of their positions and test highs, right? And that's kind of the idea. You get another look at it, really. It almost ripped against them the first day, which is crazy. Let's go. Yeah. So yeah, not too much going on there as it regards to those plays, except for the outperformer being Wally World. We already did XRE utilities. Kind of middle of the road there. Got a mixed bag, some yellow, got some green, got some red, yellow, all over the place, right? So act accordingly for these guys. I would say your outperformers are PCG, and PEG. Look for nice pullbacks or healthy pullbacks there. CEG, also a decent little pullback there. And SRE, double green, nice pullbacks in the XLU. Okay. Things to avoid: Southern Company, don't worry about that. NEE, don't worry about that. Duke Energy might be okay, but just kind of be mindful that we wanted the teacher's pet in underperforming. VST, probably the best thing smoking. Let's go bring him to the front of the class real quick. VST is looking like the hot stock. Was there an indication to kind of get into VST? There was a break, which you got stopped out. Again, we were watching out for the Fed candle anyway. So, was it the Fed candle? I don't think it was. No, this is 12.9. So it sold off way before that. Where's the Fed candle? Oh, it almost didn't budge. It didn't go anywhere new, I should say, for the Fed candle. But then right after, it gets washed, that is prominent. It didn't even put in a setup on the Fed candle day. That was something to note, right? That would have been pretty big. While everything else is like putting in like a setup candle, this didn't even budge. It's like, oh, normal day. And then it gets gapped 2 days later with the stop out of the low. This would have been absolutely massive, right? So catching those little things like that, man, it's like you'll start to catch them as you do this like every month. This is kind of why we do these things, so you can see it. But we like to go through and do our homework. You get to see the whole thing, because we get to bring our outperformers out to the front and see how they're performing. Like, oh, okay, there's some real strength there. So if you're looking for exposure in the XLU and you don't want to get exposure to the whole thing, just get exposure to the outperformers, right? Depending on what your strategy is. What else we got? So that is the XLU. Let's push on to, we hit the XLV, we hit the XL. Let's go to hit the LY for last but not least. So consumer discretionary, right? Post holidays, folly days, as we like to call them. We'll pull up here your deal. Okay, so remember, consumer discretionary. We'll bring him to the front of the class here. Boom, boom, boom. Get rid of all that. Get rid of all that. What we're trying to do is show you the track record that it's had compared to the S&P, so you don't get juked out of your shoes. So as you can see right here, look at that, right? Underperforming S&P, underperforming S&P, underperforming S&P. Going into holiday season, outperforming S&P. So does this mean that this can sustain itself? Don't know, right? As things get a little bit more expensive, the margins get a little bit better. So maybe, right, there is an inflationary narrative that you can argue there for consumer discretionary. As inflation gets higher, the margins become better. Depends on if prices comparable get higher. So it just kind of depends. Can they survive there? Right. But I'm to the fault of myself, right? I'm not really looking at that, but you have companies like Amazon, Tesla, Home Depot, McDonald's, right? Really name brands. You got Lowe's here. You got Chipotle, right? Nike, Starbucks, those kind of companies in here, right? So when people go to the store for gifts for their family or whatever, they're going to be going to places like Home Depot, Lowe's, Amazon, buying a new car, Tesla. I don't know about McDonald's. That's probably why it's in the pooper there. But Amazon's seeing a nice push there. Let's go take a look at Amazon. I'll bring him to the front of the class. This is on the daily. On the weekly, he's probably really crushing it. Yeah, look at that. Just massive. AMZN. Look at that. Just insane, dude. Is there any indication? Well, you've got some support at 216, highs at 233. Could see some juicy rotation, but right now the moving averages are so freaking wide, right? Amazon actually been a really good buy. We got in at the first trend change here, at around 9305, kind of rode it up all the way to the 200. Started taking some off at 214, right on the next push. Wasn't bad or anything like that. Just where we were in life, we wanted to take some profits from some stuff. for the move. We did that, and it's not looking too bad there. So rotational support and resistance at highs and that 216 level. Watch for that. Tesla. So Tesla, we're gonna bring Tesla. We have to bring Tesla to the front of the class. Sorry, love Tesla. Been making a killing on Tesla as in regards to back here in April of 2023. Massive gains in Tesla, absolutely insane there on that rip, and then it just kind of slowly started to peter out until come move forward to the current present. And I mean, you're in the stratosphere territory. So again, you already know what I'm probably going to say. Wait for it to come down and pick you up. Tesla's not going anywhere. If we can catch this for 1, 2, 3, 4, 4 roll and a pull off at highs in 3 ATR stratosphere and it starts chopping its way down, don't think you're missing anything, man. Wait for it to come down and pick you up. It might take some months, but this game is about patience. This game is not about position, right? Being patient gives you the position if you're waiting and you got the right tools and you got the right setup. Okay. So just be patient. Easy day. So yeah, we had to bring Tesla to the front of the class. But that's pretty much it. So we're gonna tap into a couple setups here that we want to bring really to the front of the class and kind of go through our setups, and then we'll call it a day, right? Our potential plays for moving forward. So starting out, we've got COHR, right? COHR kind of channel up here is channel. You can see that we marked it out here, CHOR, but did give a nice juicy setup candle there. It's in an uptrend, not really looking for the green ones. We want to looking for the out of place ones, the outstanding ones. So just to take your note, right? Corn emotions here. In a new uptrend, unbalanced volume is starting to try to catch some traction here. Corn's been in a downtrend for a very, very long time. So we can get an uptrend change. It could be in an uptrend for a very, very long time. Or it could just peter out. We don't really know. So we kind of don't want to get too over leveraged with corn. There is another setup here. So if you can go, maybe, but it's playing with our emotions. We might just let corn pass by and keep it pushing. GEVO, one of our favorites. Definitely like bringing him to the front of the classroom all the time, right? For us, setup candle was in play, squeeze was in play, uptrend, took that. A lot of traction on this in the news. People have been talking about this because a lot of the committee members look at stuff like GEVO, and we don't know why, but they do. And so if it's on their radar and they're buying it, then yeah, I mean, can we trade it? Yeah, with our system, right? We can trade anything with our system. So why not take a stab at it? I think we're currently up what is it, 60%? I don't know. Let's see. GEVO. Where are you at, buddy? Are you hiding from me? Yeah, 65%. So if you're up 65% on the move, and we didn't even buy the options on this, we bought the shares and we're up 65%. That's kind of the point, right? Like using your system, can you do that? Your edge that you currently have right now, can you say, yeah, I'm buying and I'm holding shares and I've been holding them for maybe a week and a half and it's up 60%. We like our system. So, yeah, be that what it is. HTGC. Right. So a little bit of a setup candle here, but keep in mind it is rotation, right? We like to prioritize uptrends, downtrends, and then sideways trends last. So probably bypass on the Hercules cap incorporated. We'll probably let that go. You can, if you want to, what I would do is say, okay, if it breaks rotation, you can maybe take to the rotational low, right? We'll stop out at the high. That's if you really, 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 really want to take this play. And I only recommend you do that if this was already on your watch list and you were already looking at it. But if you're just hunting for a play, let it go, wait for a pronounced uptrend. Kind of move on there. You got Joby. Look at Joby stepping in. Joe B. Nice. I don't know why my keyboard is not putting the O. Okay. Had a little hiccup there, right? So Joby not looking too bad. Been in a pretty good uptrend for a minute there. If you want to reference the 21 peer moving average as your reference, because there was some red showed its head there. But overall, right, Joby, a couple opportunities to get into the play here. You might get peekaboo stopped out, but if you waited, you got a little rip there. Very nice rip here. No opportunity to really get in though. This is your only indication post earnings that if it breaks, you can run it. It's kind of outside of our rules, but there is justification for it. The reason why we have this is because it, digital traffic on something like Joby or committee hearing traffic on something like Joby. It's cheap, $9.77. Is this something you take on FOMO? You take on buy? Nope, we take it on pullback. So just let it go. Let it wait till it come back and pick you up. Rivian, new one, right? RVN, car company. Make some decent cars, man. They're kind of starting to get really popular. Our IVN, excuse me. Our IVN. Put that in there, right? Blowout candle all day. So uptrend, nice pullback. No setup on the pullback, but boom, really nice move there. Moving from around $13.69 all the way up to $16.49 in a day. So not too bad. And it wasn't even earnings, man. I think people just wanted to buy some Rivian. So shout out to them, right? But the company needs to be a little more profitable, right? Wouldn't mind it coming down and picking me up. But as of right now, trend change on the Rivian, right? We got UNG, the Widowmaker, coming up, and then we. The Widowmaker here. Nasty pullbacks here. So just watch for maybe a break above there. But seeing this and thinking that it's just going to return, we'll let it go by, right? Not looking for too much there. The trend did change. So if this was a setup candle, would have loved to take that. It wasn't. You see this pulling back very heavy like that. Looking for a V shape, I think it's more of a pipe dream. Right, and then we've got wheat here. Blowout candle there, right? Downtrend, pronounced downtrend, nasty little red candle right there. Catching something like this is more along our speed, like nice little rip up, and then there's a failure. Nice little rip up, then failure. It's different than UNG because if you go look at UNG, right, let's go back and look at a real uptrend here. It hasn't really been in one, and that's kind of the point. See what I'm saying? So I'm not holding my breath for like this new uptrend. We can go back and look at some of these. A little bit of a pullback there for some follow through. Little pullback there for some follow through. There is a justification here for how deep the pullback is for a little V shape, right? But even then, right, if there's other stuff that's out there, other stuff that's in play, we're not getting like just a screaming signal, then there's no point. Maybe we get down to rotation, we start seeing some setups back down to the 8, back down to the 21. Cool, we'll take it. But until then, we can like bypass something like that. And then XLB as a whole. Right, setup candle there, 3 ATR, pretty much double blowout, right? Selling off pretty much down here in the dirt, and there's that. So there is justification for maybe a buy bias if you wanted to put XLB in your portfolio overall, get the ETF. But yeah, really, if you're not looking to put that in your portfolio, then what I would do is I would wait for a break of hive here to go ahead and throw it in your portfolio. So get a whole ETF for the massive dip doesn't sound too bad, right? If you want to be in the XLB. In the makeup of things, right? Your XLB. Let's go back real quick. In your makeup of things, what are you buying in the XLB? Like, what are you actually getting? So we can go back to our flex grid, right? Which we I think left off on the XLB, or no, we left off on the XLY. So let's go back to the XLB. What are you actually buying in the flex grid? You're getting materials, right? That's what you're getting. So, are you okay with getting DuPont, Dow, Newmont at the lows, right? Freeport McMoran at the low of lows, right? Are you okay with getting materials at the low? I'd say, yeah. I mean, if you're gonna buy something, you want to buy tools, get at the low, right? Materials, get at the low. Sherwin-Williams, right? There is a strong case that it's winter, and you probably won't get a lot of demand for that stuff until you start getting into the spring, in the summertime. So yeah, if you want to get something like XLB with the break of that, you got some cash laying around, you can pull the trigger. You can definitely pull the trigger there for XLB on a buy bias. But it's a buy and hold for sure. Buy and hold for sure. Because if it breaks and it continues to keep going, what's low can go lower, doesn't have to bounce off 3 ATR. It's definitely falling down into the 80s and falling down into the 78.06 level for sure. It's just going to keep going into this zone. So if it's not showing signs of really pushing back up, I would literally take it off at 82.96. Let's call it a day. Oh yeah. Let's go to the other subs here. We've got APD. Yep. Trend change might be in effect here pretty soon. If it can't get some traction. CEG. Right. Saw this guy coming out of here, pushed out, and then nice juicy follow through. So I could see it completing the rotation back up the highs from the last push. If demand upticks, if not, you're out of head and shoulders territory, which is really good. It does make a relative lower low, and we're looking to see it make a higher high, right? If you don't have it, don't worry about chasing it, wait for the pullback. SHTR. Cool. That is right, SHTR, yeah. Mistyped that. Okay, ENT. ETN, excuse me. Setup candle here. Not what we're looking for, but it did get one of those double breaks where you get in, it stops you out, and you're like, hey, you're getting another look at it for Eaton. So we'll go ahead and bypass on that. If it bounces, cool, but it'll bounce without us. Unbalanced, there is justification though. Unbalanced volume is starting to uptick. So that in an uptrend. So if it's uptrending, unbalanced volumes uptrending, and you start seeing some buy clauses here, these guys didn't really get paid too much. You could say, okay, you gotta take a buy there. If you want to take a buy and you don't want to risk a lot, butterflies are in effect for ETN. Last but not least, VST. Right. Saw this. This is the move's already happened, right? So this is what I'm talking about. We see something like this in the news, and it's blown and it's moved a lot, and people are like, "Hey, take lunch." Well, look where it is relative to moving average. Are they tight? Are you close to them? No, it's away, closer to ATR. It's that. Be cautious. Like, look for something else, right? Look for a dip. Look for something that pull back. You get stuff like that. You start to get stuff like that when people are excited, and then they tell you about, really they should just tell you, hey, this move happens and I'm excited about it, right? But not telling me about the move as a potential play to get in doesn't really do me good when it's up here and still going, right? VST. Right? So just keep that in mind. It doesn't do me any good. This is where it needs to do you good. back here, back in this area. Is there setups off those dips right here? Look at that. Yeah, thank you, thank you. Yeah, being added. We're gonna go ahead and mute that. Okay, cool. But if you've got this going on here, right? Look at that. There's this, and then boom, it explodes to the upside. Setup candle off the nice dip there. Look at that. You get this, explodes to the upside. Nice little dip. Nice dip. There's a couple opportunities to get into the play. You do get stopped out though. But is that okay? This 1 bar, 2 bar professional, is that okay with getting 4 or 5 bars to the upside? Multiple weeks to the upside. Are you okay with that? Right? You have to ask yourself. So, but with that, guys, we really do appreciate you sticking it out with us the whole time. Yes, this was a longer video. We do like to make these videos at least once a month where we get the full outlook of the market to see where everything's at. Got to see some plays in XOB. Could be a good potential player for the long term. ASML, AMD, good potential plays for like the month on the long term or to make your year. Could be. You've got some GVO setting up pretty nice, and you've got some plays in the XLC, XLK setting up pretty nice to recap. So without further ado, guys, thank you so very much. Remember, don't chase, wait to buy the dips, wait to short the rips, have a plan, and don't run off with the FOMO. You guys, we're going to be here every day that we can be. If I'm working, I might not catch you guys in the mornings, but again, remember, this is kind of a video log for you guys as we get the system up and rolling, and we just keep trading for the future, man, keep growing and building. So thank you guys. This is your boy MC Fire. Appreciated this monthly overall market recap, first Sunday of the year. You guys have a good day and peace. Bye-bye.